Good morning and thanks for joining us. Today I'm talking to Gina Domanig, the managing partner of Emerald Technology Ventures. In 2000, she founded the business as the first independent cleantech venture capital fund in Europe. Featured in Forbes 50 over 50, Gina has over 30 years of international business experience, including banking, M&A, strategic development, and venture capital.
So thank you for joining us today. I'm always excited to interview really smart women that are trailblazers. So for our listeners, can you talk about your roots and how you started Emerald Tech Ventures and what your original goals were?
Sure. So my background is in finance. As you can hear from my accent, I'm originally American. I've lived in Switzerland for 35 years. The first 10 years I was working at an industrial technology company that was going through a massive transition. And in that period of time, I was head of strategy and M&A, and we were doing lots of scenario analysis. And this is back in the 90s. And we really had the strong hypothesis that sustainability trends were going to have a major impact on the industrial sectors. And so after the big restructuring was done, I left the corporation and started up what is today Emerald, with the hypothesis, again, that sustainability is going to have a major impact on the industrial sectors. And really, as I'll probably mention later, we're focusing on helping corporations with that transition, so accelerating the transition to a more sustainable world.
So you started this 25 years ago, 25 years ahead. Where are you now? And are you at your original goals? Have you exceeded them? Where do you think you're at?
I would say that, obviously over the years, we've tweaked our strategy and really doubled down on a lot of our original assumptions. We work today exclusively with corporations. So that is kind of the trade-offs that one has to take in order to be really good at something. You have to decide also what you're not going to be doing. And yes, we have lots of proof points that we're able to help the corporations with their open innovation, help them finding the right startups that they can work with to bring more sustainable solutions to the market. We're helping the startups to get in touch with the corporations to accelerate the commercialization of their innovations, but we're never going to be done, right? So I would say yes, we're quite confident that this is the right path to be on, but the world isn't at net zero yet.
So can you tell us about some of your favorite companies that you've invested in and that you've made introductions to, and what their success stories are?
Oh, sure. I can take one company where I was personally involved and on the board. It was a company, Spear Power, in Kansas City, Missouri. And they were working on, they developed a technology to address the battery applications in critical situations. So on ships, satellites, anywhere where you would say you can't afford to have a fire and you can't jump out. So they had a very novel solution on thermal management. And that was a company that we led the financing round. A lot of my colleagues, other VCs, were like, what are you doing in Kansas City? And we don't really care where the company is located. What's important is, what is their solution and what's the market potential? But of course, being located in Kansas City, it's perhaps a bit difficult for them to make the right connections globally. So we actually led that deal. We brought in a few of our limited partners, Chevron, ABB, and Noptesco. So ABB being a very large supplier to the marine industry. So ABB then just became a customer of Spear Power, so speccing in Spear Power's solution into their overall offering. And Noptesco was then a partner for the Asia market. So those, that's just a nice, let's say, simple example about not only a startup that needs to support, let's say, from the corporates to enter into different geographic markets or application markets, but also the corporates who are desperately looking for ways to make their offerings more sustainable.
And one of the things I really liked about your company when I read about it is that you hire the best people to actually look at the companies you're going to invest in. So you have people with PhDs, you have the smartest of the smartest out there. Do you think that gives you an advantage so that they really can dig deep and really know the companies that they're investing in?
Yeah, it's, you know, it helps us, it helps inform our investment strategy. Obviously, they are scouting for a lot of these deals. They're the ones that are having the first conversations with the entrepreneurs. And especially because I'm a finance person, so I'm not one of those super smart people. I'm often getting, I'm often getting the feedback from the entrepreneurs, how much they appreciate the conversations that they're having with the people on our team. They're like, finally a VC who actually understands what the critical issues are in our sector. And yeah, so it helps us to kind of form that relationship with the entrepreneurs, also to dig on the due diligence. It's very, you know, it's not that all of our companies are successful, right? We're venture capital, so there will be companies that are not successful, but it's very, very rare that we end up getting kind of blindsided by a risk that we should have known about but somehow didn't, right? That doesn't usually happen to us. If we don't understand enough about the sector, we simply don't invest. And also because I often say, you know, things are, you know, these companies are going to have difficulties, and if we don't understand the sector and we don't have a strong understanding and network and everything, we also won't be able to help them when they get in trouble. So it's great that, you know, we've got, and people who've, you know, been with the company. I just celebrated one of my colleagues retiring. He's been with us for 23 years. Many others who've been with the company for 10, 15, 20 years. So it's great because not only are they really good, but they stay. And so that knowledge stays within our team. And, you know, we just continue to build upon that strength.
So can you break down some of the sectors in clean tech? I mean, some of the obvious ones everybody would think you're investing in, batteries. What are some of the more obscure ones that you think are really critical to the success of clean tech?
Well, I would say the water sector, and it's not that water is, you know, it's going to surprise anybody, but it's very difficult to do venture capital in water. There aren't really that many companies. Companies are very often selling to utilities. It's a very, very long sales cycle. So it's a very difficult sector, but it's a sector that we've been investing in since the very beginning, so 25 years. And we're absolutely committed to continue, even if it's difficult to do, it's still something that we think is super important. Another sector is the packaging sector, which, you know, I would say, you know, 3-4 years ago, there was a lot of talk in the market, oh, there's going to be regulation, companies are going to have to move away from single-use plastics. Then, you know, the regulation was very slow. There's a lot of backpedaling from corporates in some of their commitments. It's still a sector that we're very interested in. We have to be careful about properly estimating the market demand and the speed, but it's still a sector which we think absolutely has to happen, right? And it's, you know, it's often, you know, I always say that, you know, what's typically the big risk for us is market demand, right? We can find great entrepreneurs, we can find great solutions, we can find co-investors. That's not the problem. The problem is very often the market demand. And in some of these sectors, there just isn't the right, you know, incentive, if you'd like, for the incumbents to move. And until those incentives get in place, whether it's with a carrot or with a stick, it's, you know, we have to be careful, right? Because it isn't our job to find great solutions that aren't going to have much traction in the market. We have to find the ones that, you know, those two things come together. We've got the great solution and there's a market demand. But we're still, even though that, you know, that right now there's kind of, I would say, some headwinds in the packaging sector, it's still a sector we're absolutely committed to.
And what is your typical due diligence process? How long does it take? If you look at a company, what's the time frame? I know everyone would be different, but on average, what would that look like?
I would say, you know, if a company is really, really well prepared, right? They've got a data room together, they've been answering similar questions. I would say that, you know, it could be quick. It could take 2 months from us getting from, you know, let's say deciding that we're gonna start the due diligence to actually getting to a transaction. But in reality, it's usually 6 months, right? We do a lot of reference calls. It's a very delicate process for companies to set up reference calls with their customers or potential customers. So that usually takes a while for them to set it up, find, you know, schedules and whatnot. But it's something that we, you know, we find out so many really important things about the companies. And also we introduce the company, the startup, to many of the corporates that we know, whether they're LPs or not, but those that we think could be potential customers. And that is also something that is not just beneficial for the startup, but it's really insightful for us as well. To hear from the corporates, you know, what were the pain points? What are the, you know, what would they realistically do as a next step with this company? How long would it take them to actually onboard the technology?
And what's a typical investment? Like, what's your minimum maximum in terms of amounts?
I would, you know, typically we're investing let's call it 5 million euros in a first round. And we're typically investing in early commercialization, right? So this is, for a US company, it's a B round. For a lot of the European companies, it's still an A round. Typically, the European companies can get further on kind of soft money. So we're going in there with 5 and then reserving another, let's call it 10 million for the company. So it's very often the case that the companies will have additional rounds after our financing round.
And what do you think some of the biggest mistakes in Cleantech have been? Personally, I think the ESG narrative that was oversold and diluted, because I think that a lot of corporations shouldn't have had ESG policies on their website. And I think the greenwashing that went along with that, I personally think innovation can solve any problem. And I think all these startups, they're not going to have that issue. But I think Cleantech in some ways got a bit of a bad name because of some of the other issues. What do you think? And where do you think it's going to go?
Yeah, you know, so we've been doing this for now 25 years, right? And originally we called it sustainability. Then people didn't really understand what we were talking about. Then the term clean tech came up. Then, you know, everybody jumped on clean tech, and then clean tech got a bad name. So then it was going back to kind of sustainability and industrial, and now we're calling it climate tech. You know, the truth is we've been doing the same thing for 25 years, right?
Yeah.
In Europe, we don't have these wild swings like you find in North America, right? So it was never that clean tech was totally in or totally out, right? We've got, you know, perhaps our legal processes take longer here, but when they get through, they typically stick. We don't have this kind of swinging, as you see now with, unfortunately, the US, kind of the pendulum swinging completely in the opposite direction. We don't experience that so much in Europe. And because we're active globally, we're a little bit, I wouldn't say immune, but we can afford to kind of ignore North America if it's going through a bubble and just not invest in companies that are overvalued. And then, you know, double down when everybody else thinks it's a horrible sector, and they run for the hills. And we're thinking, you know what, we invest in industrial technologies. The energy sector will always be there. The mobility sector will always be there. The, you know, water sector will always be there. There will always be a need for industrial automation and IT. So we just stay our path. But I do think that it's not helpful for us when our sector becomes the darling, because then you get a lot of, you know, the tourist investors, people coming in who I think it's also not helpful for the startups. They may get their financing round together quickly and at high valuations, but it's not helpful for them to bring on investors who have unrealistic expectations about how this is going to work, right? This industrial technology is difficult, right? these are long sales cycles, lots of piloting, a lot of things that unfortunately the incumbents need to go through in order to become large customers to these startups. And and when people are throwing money at startup companies and believing that they're gonna quadruple in sales in the next 2 years, sorry, that's not gonna happen. Or that a hardware company is gonna have 70% gross margins. That's not going to happen. You don't understand what hardware is, right? And so I think that we're happy that there's more money coming in during those times, but it leads to kind of foolish decisions. And unfortunately, what happened when Cleantech went through its bubble and burst, then all of a sudden, people think, oh, this is a horrible sector, you can't make money. That's not true. We demonstrate that you can make money, but don't do stupid things.
And in closing, I always like to have a personal story. So with all the companies you've looked at over the 25 years, what is your biggest personal best surprise? Like a company that may have came in through your doors that you didn't think was the one that was going to be your biggest success, but is like one that really surprised you.
Yeah, so actually I have 2 surprises, right? If I could do. One was a company, a biopesticide company we were invested in for 12 years. I mean, I wanted out so desperately. I was a real pain at every board meeting. Let's sell, let's sell, let's sell. But the majority of the board didn't want to sell. Company had like 30 million of revenue, loss making. And then one of the large customers of them asked if the company was for sale. And in order to fend off any type of an offer, the chairman said, yeah, tell them they can buy it for 500 million. And the other side said yes.
That's great.
I couldn't believe it, right? So yeah, so that was a very, very big surprise. I mean, I've been doing M&A now for 35 years, and I never would have thought that would happen. The other one was a really interesting company in the US called Usher, which was doing high definition mapping for the autonomous driving sector. And we had actually spun it out of another company because it was very loss-making, super nascent application area, would have needed a lot more financing, and not all the investors wanted to do that. So we said, okay, fine, we'll split it off. We'll sell the other company because it's mature. And those of us who want to go on, and continue to invest tens of millions into this little thing, we can do that. And to our shock and dismay, the company was sold within 12 months.
Wow.
We made 10 times our money. You can't really say no to it, right? I didn't even have the ESOP plan implemented, right? Which just shows you, you have to be prepared for an exit at all times. And you do have to prepare exits. It isn't going to happen. This idea that companies are bought, not sold, I don't believe that. I think that in most cases, you actually have to work quite hard to prepare for the exit. But it's nice every so often when you get a really weird surprise that leads to a nice return. Right?
Well, thank you very much for joining us again. It's always great to see a woman that's a pioneer, and you've been doing this for a long time, and it looks like it's been very successful. What is the amount you manage, over $1 billion?
Yeah, we manage on the venture side, it's about 730 million euros, and then also 500 million on debt guarantee program that we manage. So it's about 1.2.
Good luck and keep doing it because the planet needs it. And I think we all appreciate what you're doing.
Thank you very much, Don. Nice talking to you.
Okay, bye-bye.
Thank you for listening to today's podcast. InvestorIdeas.com is a go-to platform for big investing ideas. From breaking stock news to top-rated investing podcasts, we cover it all. Our original branded content includes podcasts such as Exploring Mining, Cleantech, Crypto Corner, Cannabis News, and the AI Eye. To learn more about our site, go to InvestorIdeas.com. Our site does not make recommendations for purchases or sale of stocks, services, or products. Nothing on our site should be construed as an offer or solicitation to buy or sell products or securities. All investing involves risk and possible losses. Paid content is always disclosed. Global investors must adhere to regulations of each country. Please read the investorideas.com privacy policy on our website. Thanks and have a great day.